Alright, what's happening, guys? Welcome to another episode of Sensible Investing. My name is Jesse, and today, what the hell is going on with Qudian, right? Down 45% in the space of the last week since they reported their most recent earnings call, and it wasn't even that bad, right? So I've been getting a lot of questions from my subscribers going, hey, look, what's going on, you know? I mean, is a company going under? Their delinquency rates seem to be going up, and then they've just cut their guidance, and then they've said now they're going to actually shift away from direct lending to the open platform, and all of the above, right? So today, this video, I'm going to answer these questions for you. And for those of you who bought Qudian, reading Sven's articles and watching his videos, but have now been left in the dark, this video is for you guys. Okay, so at the end of this video, if you've found it to be useful, got something out of it, and had your questions answered, I would love it if you would share the love by either clicking the like button, sharing this video with somebody who you think would find it useful, or just leaving a comment. That's really appreciated, and it really helps the channel grow. Alright guys, so let's get into it. So first of all, what the hell happened, okay? So looking at this chart, this 5-day chart for Qudian, you think the company's pretty much about to go under, right? You think it's about to file its Chapter 11 because of just how much it's dropped, okay? 45% in the space of 4 or 5 days, with the volumes being much more than on average, okay? And some people have been saying, oh, look, this is, it's shorters trying to short the stock because of what. Okay, guys, this volume is not shorters, okay? To short this amount of stock, you'd have to be a lot of shorters or a very big hedge fund, okay, guys? Now, you think, okay, well, looking at this trading, it looks like it's about to file its Chapter 11, but it's actually had quite a good result. I mean, it said, look, net income has increased by 53%, and the revenues actually beat the analysts' expectations. So you guys might be wondering, well, look, what actually happened, right? And so based on my research, there are a few things that have caused the slide in the sell-off, okay? Now, as you guys may remember from my previous videos, you'll know that they had guided 4.5 billion RMB as the net profit for the year, but have dialed that back to 4 billion. Now, that's still more than the 3.5 billion that they initially guided, and it's still almost double what they did back in 2018, which was 2.5 billion. Okay, guys, so this is everything, it's important to keep this in mind, right? And furthermore, what's exacerbated the slide is one of their peers in the peer group, right? So if you think about Chinese microlenders, you've got Qudian, Lex and FinTech, PPDai, and YRD, okay? And so these are the sort of 4 players, the major Chinese fintech players. And PPDai have actually missed on EPS, but furthermore, they actually had a pretty, I would say, underwhelming guidance, okay? So what happened was Qudian got sold off, which caused PPDai to get sold off. Then PPDai had a bad call, which then caused PPDai to get sold off, which then caused Qudian to get sold off, and as you can see, it's just going around in a circle, okay? So that's why it's just been going down and down and down this last week. All right. Now, as you can see over here, PPDai actually guided, and as you can see highlighted in yellow, this represents a sequential decline in loan volume, due to basically what's happening is the secular problems going on with not just the Chinese credit market, but also the Chinese economy as a whole, right? So as you can see, Qudian have dialed it back, PPDai have dialed it back, okay? Now, there's been a short article that was posted on Seeking Alpha, and it was by a guy called Terracotta Investments, okay? And they posted a very, very bearish article on Qudian. And so, now, whilst this article is very misguided and incorrect, I believe that this is an accurate representation of basically what the market thinks and feels about Qudian and its general sentiment towards this company and I guess the micro-lending industry as a whole. So I thought it'd be interesting to respond to this article. Now just keep in mind, guys, okay, that I think this article is probably one of the most poorly written short theses I've ever read, okay? And there are a couple of reasons for that, okay? I mean, to give you one quick example, you can see over here, the author has gone, oh, well, look, the open platform, okay, it lacks meaningful differentiation and it's unlikely to be a key revenue driver, despite the fact that, it's contributed about 40% of Qudian's revenues, okay? So you can already tell that this article's, you can see where it's going, okay, guys? But for the sake of, demonstrating market sentiment and really answering all of the misconceptions and misinformation, this video will focus quite a lot on what's been said in that article, okay? And I think it's also important to point out that Mr. Terracotta Investments is actually long Lexin FinTech, which is, I would say, the primary competitor to Qudian, okay? So he's written a bearish article on Qudian and a bullish article on Lexin. So again, look, it just smells of troll to me, okay? So it smells like a quickly written short thesis because, obviously he's got his money elsewhere, okay? All right, so let's get into it. Okay, so his first argument is that he says, oh, well, look, Qudian lost its Ant-Pay-Alipay relationship, and obviously this was terrible for the company because, it no longer had the backing of Ant, and that way, the traffic, right, it wasn't coming in, and so as a result, they had to rely on their existing user base, which is, obviously not correct, because if you look at the table below, you can see that they've actually been growing their registered users quarter on quarter on quarter on quarter without fail, okay? So already that's misinformation there. Furthermore, with the Ant relationship lost, Qudian have actually spent less money on marketing because they don't have to give a kickback to Ant. Okay, so which is reflected in their operating margins going up and their sales and marketing spend going down. Okay, first point disproved, and also just to remember, okay, guys, I made a video back in May and it talked about the Ant-Alipay relationship only contributing no more than about 3% of the actual revenue towards Qudian, and it actually wasn't even that profitable because the Ant-Alipay capped it at 24% APR, whereas Qudian likes to do 36% APR to, mint the money, all right? So, okay, first point disproved, right, guys? Moving on. Right, second point. So, second point, Terracotta says, oh, look, Qudian focuses on the 36% APR, and these guys, these are the vulnerable or the weak or whatever you like to call them, right? And because of the regulatory evolution and landscape, that's actually going to severely drive down the APR that Qudian can get moving forward, which means that there'll be pressure to reduce pricing, and it can't obtain a favorable funding cost from its institutional partners. Okay, so my answer to that is like, what are you talking about, bro? Like, where have you got this information from? Because I certainly wasn't able to find anything, okay? So if you can find some of that information to give to me, then I would really, really appreciate it, all right? But as far as I'm concerned, that's pretty much misinformation, all right? Okay, now moving on. The third argument is that the author argues, look, Qudian's open platform lacks differentiation, right? And so it's what he's saying is, look, the other peers, they're all doing an open platform, and previously Qudian raised its guidance because, the open platform was doing so well, but now they've lowered their guidance because the open platform is, obviously starting to slow down. And again, to that, I say, what are you even talking about? Like, look at the numbers, okay? The majority of its contribution in terms of loan volume and whatnot, the new loans written this quarter was to the open platform. So I don't know what this guy's talking about, right? So guys, what's actually gone up is the open platform, and what actually went down is the direct lending platform, which obviously is a complete contradiction to what the author has been saying. So I don't know what earnings call or what quarterly report he's reading, okay? But if you're watching this video, Terracotta Investments, look, say no to drugs, okay? It's not good for you. Right, moving on to the next point, okay? So his next point, he argues that, look, Qudian's struggling to earn the trust of licensed financial institutions, and the ones that they do work with are those really, like little shady houses, small scale, okay? And so what's going to happen is they're going to charge Qudian a lot more, and Qudian's going to be able to get a lot less because the smaller houses have less scale, etc., etc. Okay, and that's what he argues. And again, to that I say, what are you talking about? Okay, so what I actually did was I went to the author's page and I said, hey man, I'm just going to call you out on where you're getting your short thesis and your facts from. Like, where are you getting all this information? Okay, and to my question, I've heard nothing back but crickets till date. Okay, so Terracotta, again, if you're watching this, look, I'd really love to know where you're getting your information from for your short, because I clearly couldn't find any of the information that you're stating. All right, his next point says that Qudian is being forced to move into the open platform because the what do you call it? The direct cash loan business is in decline, as demonstrated by their recent decline on the quarter, and a lot of that is actually being driven by the fact that the institutional partners are becoming more hesitant to work and lend with Qudian. Okay, and again, not too sure what he's talking about, because as you can see, their off-balance sheet transactions have actually materially increased, and furthermore, they've grown from 94 partners to 112 partners. Okay, so what that tells me is that people are more willing to work with Qudian. In fact, the off-balance sheet transactions increasing reinforces that. Okay, so again, I'm not too sure where he's getting this information from. All right, now his comments on the decline of the financing income. All right, I already covered that a little bit earlier, and that was because the management have said, look, we are trying to manage our risk by doing more transactions in the open platform, thereby offsetting and handing over all of our risk and throwing it to our institutional partners because of the current secular and economic conditions within China and the credit sector. Okay, so that's the reason. And again, the author hasn't given any evidence to back up his claims that any otherwise. All right, so again, look, I don't think it's a well-written thesis. All right, now finally he talks about the delinquency. Okay, so the author says, look, Qudian's delinquency rates have gone effectively doubled since, as you can see where the purple line is over here. He said the delinquency rates have doubled because their credit quality and asset quality is decreasing, and therefore it's going way up. Okay, and so to that I ask, well, look, you're bullish on Lex and FinTech, but yeah, their delinquency rates, as you can see, have gone way up too. And if you compare that with 1.25% to 2.5 versus 2.5 to what is that, 5? Well, Lex and FinTech has effectively doubled. So, what are your comments on that, right? And again, nothing, right? So I didn't hear anything, right? So looking at these two, what I can say is that the asset quality decline isn't limited to just Qudian alone, but I actually think it's the entire sector. Okay, so that I think it's a real risk, but it's not limited to Qudian, right? So this actually brings me to my next point. Okay, and the next point is, as you can actually see based on Qudian's most recent presentation, the delinquencies are definitely increasing. Okay, so that actually tells me that something's happening within the borrower base, all right, and within the Chinese economy. So we have to keep that in mind, all right? And I actually think that this is a little bit worrying, not just for the Qudian company, but for the entire sector. And the reason being is because if you look at what the CFO has said, he said, hey, look, our delinquency has sort of, I guess, stabilized at the 10 to 12% range. Now, that includes our open platform delinquency. However, our open platform delinquency is quite a lot lower than the normal delinquency, right? So what that means is perhaps the cash loan delinquency is even higher, and therefore, when combined with the open platform delinquency, has actually brought it down to a reasonable level, okay? Which kind of makes me worry, again, not just to Qudian, but to the actual sector in China as a whole, and the credit sector, micro lending, the whole economy, right? And I think that's a real risk that we should focus on, right? So let's talk about these risks. Now, if you guys haven't seen these two videos, I would really recommend you have a look at these videos, because it talks about China having a similar type environment to what US experienced back in 2008, 2009, but perhaps even more to even to a greater degree, okay, even more worrying. And the reason being is because, you've got ghost cities, you've got projects that have been started and then stopped, and then you've got these half-built towers just sitting there doing nothing. You've got entire cities that have been constructed off of the back of investments and funding, yet nobody's gone to live there, right? So there's quite a few problems happening in China at the moment, and so my worry is that it's going to be this big bubble that'll burst, but it's going to be even worse than what USA had back in 2008, 2009, okay? And adding to the risks and my worry is, as you can see, China's debt to GDP, okay, it's almost 310%, right? And that is quite a lot higher than any country in the world, I believe. And I think the US is only like 24% or something like that, okay, guys? And so this is a massive worry, right? Because, I mean, how are they going to repay? Where are they going to get the money to repay from? Are they going to print more money? Like who, So this is something that we should really consider as a real risk, all right? Okay, guys, and a really good illustration of my worry is if you look at the numbers from their most recent Singles Day sales, okay? You can see just a large volume of things being bought on credit, okay? And some of these companies, these e-commerce companies, were actually offering 0% interest rates on, about 8 million odd items, okay, guys? So have a Google of that article and have a read of that. It really is a little bit worrying. And the fact that it says, look, the banks, they've gone, oh, look, we'll just sort of dial back our lending to corporations and we'll now focus on the retail sector. Okay, like that in itself is also another red flag, because you can say, well, hang on a second, if a corporation is struggling to pay back debts, what's like the plain retail people going to do? Okay, guys, so look, I think that there's something going on in the Chinese economy that's a lot deeper than the micro-lending sector as a whole. And so, for me, this is an actual cause to worry, none of what the short selling chap was talking about before, okay? And again, just to sort of highlight the risk around that, I'll just take you through a couple of extracts from the YRD call, which is one of Qudian's peers and one of the four lenders, and their comments on the current uncertainty in the economy. And so hence the fact that they're also being conservative and starting to dial things back a little bit. So really, really interesting stuff, okay? Principal balance of performing loans decreased 6%, okay? And this is amidst the tightening regulatory environment, but also the allowance for the contract assets have increased, driven by the changes to future collectability estimates, all right? And so translating that into plain English, default, right? Inability to repay. These are some of the things that we have to pay attention to. And also, if we just have a look at what the CFO of Qudian has said, they said, look, we can grow massively if we want to, but now's not the right time. We want to be really conservative, and so that's why we're diverting our attention to the open platform and even reduce our leverage to 1x if it needs be, okay? And traditionally, they've always played between the sort of 2.5 to 3x, right? And so that's quite a significant step down. And I think the comment that he made, I'm not too sure if it was a slip up or not, but he said, look, it doesn't matter if the world falls apart tomorrow, okay? So why would he talk about the world falling apart if, that's not a real risk, and if he's not worried about the world falling apart, okay, guys? So look, that's another thing to keep in mind over here. And then another point which was brought up by one of my YouTube subscribers, which was really interesting. And during my research, I wasn't actually able to figure out what's actually going on. That's another red flag, and that's got me a bit cautious as well, okay? And his comments were about the diluted shares outstanding, because through the course of 2018, 2019, they bought back quite a few shares, but then this should have already been retired, but then it became, they had an increase of 50 million in treasury stock, But not only that, but whilst the basic share count went down, the diluted share count didn't, okay? Despite them, having bought back shares all the way through the course of 2018, 2019. And I actually found that really, really odd, right? And I couldn't actually figure out the answer for that. And so, again, that's another risk factor that you guys should pay attention to. And if anybody actually knows what's actually happened here, I'd love to hear from you, right? Okay, guys, so taking into consideration everything that we've covered in this video up to this point, you guys now might be wondering, well, what's your sentiment? What do you buy, hold, sell? What is it, okay? And my sentiment at the moment is a hold. And the reason being is because I've got some conflicting information that I just wanted to get a bit more clarity around. And now Qudian have actually said they're going to host a supplementary extra call for investors, okay? And we'll talk about that a little bit later on. But I've got a bit of conflicting information. And the conflicting information that I have here is you've got Lex and FinTech, they're going really hard after the market, right? They're saying, look, we've increased our sales and marketing expenses by over 270%, and this is due to online advertising, online promotion. Like we want to grow, right? We're going hard. Now, the problem with that is that they've increased their sales and marketing expense by a shitload, yet they've only increased the upper end of their full year loan balance guidance to what is that? That's not even a 10% increase, but yet they've increased their sales and marketing expenses by 270%. Okay, so this gets me thinking, like, shouldn't you have a bit more? I don't know, right? So you've got Lex and FinTech on one end who are super bullish about the market, trying to win market share. And then obviously you've got Qudian on the other end who are actually actively reducing their sales and marketing expenses, saying, look, we just want to refer traffic off to our partners, and at the moment we're not looking to directly advertise. We're going to be conservative. We're not looking to directly grow. It's a bit of contradicting information, right? So I'd actually be really interested to see what they say on their supplementary earnings call. All right, guys, and finally, at this point, you might be wondering, well, if I want to buy, is that okay? Like, because it's fallen, almost 50%, etc., etc. And look, just to explain the reason why it's fallen so much, okay, guys, and I mentioned this in the previous video. What drives share price has nothing to do with earnings, cash flow, nothing, okay? What drives share price is the beating or missing of expectations, all right, guys? So you got to keep that in mind, right? If you look at the orange reality line, okay, change that from reality to current share price, right? If expectations are above that, then it's going to massively correct, okay? And if expectations are below that, then the share price is going to be massively go up, all right? It's pretty simple logic there, okay, guys? And so keeping that in mind, let's have a look at what's actually happened to the share price, right? Now, if you have a look at the share price here, on a pure technical level, I mean, this thing has pretty much capitulated, right? And it's not just on Qudian, right? So have a look at the volumes. The last 4 days of trading volume has been about 50, 70, 80 times higher than your average trading volumes. Furthermore, on a technical level, it's way oversold, okay? So what this tells me is this is capitulation in action, right? Now, if you have a look at capitulation, what this is typically followed by is, as you can see here, when it's oversold, then you've got all the bottom feeders and bargain hunters and value investors, all of that, which will, they're going to bid this thing back up, right? So if you guys want to buy at the bottom, I mean, I don't think you'll be wrong, but that's not what I'm going to do, right? And the sell-off hasn't actually been limited to just Qudian, but if you look at, PP Die, right, they've gone down, well, whatever that is. You look at Year-end Die, they've gone down in the last 5 days, whatever that is, okay? You look at Lex and FinTech, they've gone down, okay? So this is a sector-wide capitulation, and it looks like there's some very, very large holders getting out. Okay, so I don't actually think that many people are shorting Qudian or the other stocks. I actually think that it's just a large-scale capitulation, right? And the reason why I say that is if you actually have a look at the share price today, you can see that it's taken a 10, 11% rally, which if you look at the technical analysis over here, it sort of reinforces that there's always going to be some kind of a run-up after capitulation, okay? The question is how much? Not too sure, right? Because whilst you have one big sort of bunch of shares capitulating and liquidating, we currently don't really know what the market's overall sentiment towards Qudian and the whole sector is, okay, guys? So to conclude, I think that a good idea would be to join the subsequent earnings call, which is coming up in a few days, and really have a listen to what's going on there. And if you ever, if you even get a chance, ask a few questions of your own, okay? But look, if you guys want to bottom feed and buy, I don't think that's a bad idea. I myself, I'm going to hold because, like I covered before, I don't think that it's a risk with Qudian the company, but actually China and the entire economy as a whole, which is at risk, okay? And my worry is that if China has a 2008, 2009 type crash, which looking at the bubble that's being blown up, that's my biggest concern, okay? Now, because Qudian is only like 1-2% of my portfolio, I'm happy to sort of just hold it and ride it through. If I lose it, I lose it, okay? But for all of you guys who are massively invested, I think that's something to keep in mind. All right, guys, so that concludes the video on Qudian. I hope you guys really enjoyed the video. And yeah, look, share this with all of your friends who you find it useful. And looking forward to your feedback. Let me know if you agree or disagree. And for anybody who knows what the heck's going on with the share count, despite them repurchasing a lot of shares and then announcing some more repurchasing, do let me know. That would be interesting. All right, guys, until next time, happy investing.